G'day folks, welcome back to another update for the German DAX and the Japanese Nikkei. Now both have been showing some bullish momentum in the last few weeks with a slight pullback possible, so just be aware of that. Before you go any further, make sure you hit that like and subscribe button to support the channel. As of today, May 26th, the German DAX, despite Germany's economic slowdown, the DAX remains resilient, buoyed by global diversified firms like SAP and Siemens Energy. Analysts forecast a potential rise to €27,950 by year end, supported by bullish technical indicators. Short-term projections suggest a modest monthly gain of approximately 0.8%, with end of May levels around 22,819 points. For the Nikkei, 225 shows a neutral to slightly bullish trend, with forecasts indicating a potential 3% increase in May, closing near 36,431. Investor sentiment is bolstered by favourable global market cues and domestic economic indicators. However, the index's trajectory remains sensitive to global economic developments and domestic policy decisions. So first, looking at the German DAX, we've got a monthly, weekly and a daily. We always look at the long-term trends first for those new to the channel. And again, for those new to the channel, we've got these moving averages on the commodity channel index, 150 down here, and also these moving averages on the price chart. So here at the moment, when you see both price and CCI above those moving averages, that's a bullish momentum. So bullish momentum at the moment on the monthly. If you want to learn how to draw those, there's a video in the description below. So reference that for further reference. On the weekly, we did have a bearish divergence, lower highs on the CCI versus higher highs on the price, and that actually pulled back and hit this 23-38% Fibonacci range. And the way we draw that is, if I expand that, so this is the weekly. So we look at the Fibonacci range from that point when it showed when the CCI started declining. We take it back to that level, and you can see there the 23-38% Fibonacci was penetrated, broke below the 38% level briefly, touched the 50%, then bounced. So that actually executed the bearish divergence on the weekly. I don't trade those divergence, but I use them as an area to possibly get out of the trade if I'm going, in this case, if I'm going long and I'm trading on the daily. I use that as a reference to start getting prepared to take my profits off the table. That's on the weekly. On the daily, likewise, we had a bearish divergence here. This was a different time frames have different divergence. They're not necessarily related. Here we had a bearish divergence and it broke down, hit our 23-38% level, and this one came down, hit the 100% retrace level. You can see there off that support. Then it finally bounced off there as well. Now we could argue there's a possible bearish divergence there between that point and that point, a double top on the CCI, and the same period from that candle to that high. So higher highs on the price and a double top on the CCI. I would call that a very minor bearish divergence. So we might see a pullback. Now, depends where we draw the Fibonacci range. You can see there's a low there. I like to take it back to the previous low, and if that was the case, you can see there that wick of that candle just touched that 23% Fibonacci retrace. However, if that continues to fall, then we take it back down to the next level, and that'll be the 23% range there. So depends where you take the Fibonacci. I like to take it back to the previous low before we go there. So at the moment, the price is making advancement towards this resistance at 24,160, and the CCI is also breaking into that moving average range probably in the next day or two. Otherwise, we might see the CCI keep falling from there, in which case, as long as the price keeps rising and the CCI keeps falling, we're going to consider that a bearish divergence. Or if that CCI rises and breaks above that previous high there, then it's going to invalidate the divergence. So that's on the daily. Now, if we go to the intraday charts, we reference the daily. So taking during this period, you would have been going long and possibly started going short during this period. Now, I like to see the price also break below the moving averages to also take short trades on the 1 hour time frame in this case, but that's a bit risky to take short positions now because the price is still above the moving average. So when the price and the CCI below or above the moving average, we go long or short respectively. So at the moment, you can see there we had a bearish divergence. So from that, first we look at the CCI. You can see there that's lower highs on the CCI versus higher highs on the price. That actually broke down well below our 100% retrace level if we took it back down to that Fibonacci retrace. So that retraced more than 100%, then it bounced. One thing also to notice is both on the daily and here on the 1 hour chart, we've got these fair value gaps. The fair value gap is where you measure it from that previous wick of that candle. We take it back down to the open of that candle there, or the close, or the open of that candle there. So that little range there highlighted in red or pink is what's called a fair value gap. Now what's happened since then, the price has broken up, gone around a 50% retrace of that area, and that's filled that fair value gap on the daily before then continuing. Here on the 1 hour time frame, again we had a similar situation that highlighted in red there. We had a fair value gap, the price broke above, retraced somewhat, and then it broke higher and filled that fair value gap as well. So just be aware of that. These things happen occasionally. Likewise here we had a fair value gap going to the long side. It broke down initially, and then it finally broke to, and it took out all those orders in that period there. Now if we go to the back testing, let's look at the back testing going back to this period back there, and that's where you would have gone long on the 1 hour based on the daily trend. Again, we go in the direction of when the CCI and the price are broken above the moving averages, we take long positions in this case. And the top back test here is the stop loss approach, and that would have generated 2,943. And the second back test here is the average down approach, and that would have generated 28,801. Now one thing to notice is when the daily breaks into that moving average range at that point there, ideally you take your money off the table, because that could have started being a reversal. Now in this case it did actually recover, and it broke higher with the price on the hourly, and then finally we're broken down into a bearish momentum here on the CCI, and you definitely take your money off the table at that point. So again, I just let it run through the whole period on these back tests. The take profit is 3%, and the average down or the stop loss is 5%. So stop loss is 5%, and the average down, you add more positions once you retrace by more than 5%, and the entry parameters are met again. Next we look at the Japanese Nikkei. Now on the monthly, again we had a price above the moving averages, although it broke below it here. And the CCI, you can notice there it's broken below the moving averages. So somewhat bearish to neutral positioning on the monthly. We had a very narrow bearish divergence there, lower highs on the CCI versus higher highs on the price. And that eventually broke down quite strongly with the wick of that month. Went sideways for a while, then it finally broke down last month with another wick to the downside at the same level. So somewhat bearish to neutral on the monthly. On the weekly, we had a few bearish divergence back here. You can see there it pulled back at that level there, then another one. In fact, it actually had a few pullbacks there. And the more recent one, as I said, similar to the monthly, this is a weekly, it's pulled back again to the similar level as what it did in the previous month back, or the week back there in the 5th of August 2024. Now at the moment, the price is broken into that moving average range, and the CCI is broken above the moving average range. Somewhat, I would call it neutral positioning on that one. On the daily, it's been bullish now for a number of days with the price and the CCI above the moving average until it's finally broken below the respective moving averages. Now notice again, it's broken into the moving average range, giving us a neutral positioning. So overall, I'd say neutral on monthly, weekly, and daily on the Japanese Nikkei. Now if we go to the intraday chart, the 1 hour chart, you would have taken long positions from that period based on the daily, on the 1 hour. But notice here more recently, going back to this period, we had a very narrow bearish divergence back here, lower highs on the CCI versus higher highs on the price, and that broke down quite strongly. In fact, it went as far as the 100, almost 100% level. Well, eventually did, but until it finally hit this bullish divergence. You can see there, we had a bullish divergence, and the way that would be drawn. So at that point, once you start seeing higher lows versus lower lows on the price, you draw a Fibonacci to that high. You can see there it broke quite easily through the 23-38% range, and this one went currently sitting around the 61% range. Now there's no divergence to look at here, and this could actually keep rising. So we can't tell from these divergence how far they go, but more than 90% of the time they hit this 23-38% range. How far they go? In this case, this one went just above the 50%, then it retraced to the downside. So that would have been a completion of that divergence at that point there. In terms of back testing on the Nikkei on the 1 hour time frame, again, you would have taken long positions during this period back here. And this is the stop loss approach, and this is the average down approach. So again, the stop loss approach has generated 1,777. and the average down approach has generated 80,061. Remember, the baseline here is 100,000 on both, just to allow for any drawdown below the 100,000. Now, we're not suggesting you let it run through the whole period. You would close out the positions once the daily breaks into that moving average range on the CCI, which means at that point there, roughly at this area, you would have taken your profits off the table on both the stop loss and the average down, depending which strategy you're executing. Also take notice here of any divergence within the 1 hour time frame. Now, in this case, the CCI kept falling, the price kept rising until it finally fell, and that would have extended. You can see there was almost a double top on the CCI on the 1 hour time frame. This is higher highs in the price. I just haven't drawn. In fact, I'll draw it now to that point. Again, I don't trade these. I use these as an exit point. So if I see the CCI starting to fall and the price continue to rise, you can do one of two things: either take your money off the table or watch the price and moving averages, and probably take your money off the table once the price breaks below the moving average of the price chart. So if you're new to trading, we're including a weekly video series, Pete's Investing Plus, part of the Pete's Investing channel. The +1 videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content and help keep me motivated, keep doing these videos, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and speak to you in the next video.